Welcome back, everybody. It's Jared and Darson. We do this podcast about the Des Moines market, about real estate market, how we run our businesses, and we sometimes have an agenda, sometimes we just ramble. But again, my name is Darson Grantham, real estate agent and investor here in Des Moines. And I work on the smaller size deals, and Jared works on the bigger ones, and I'll let Jared kind of run with that.
Jared Huseman here, president of the Catalyst team, part of KW Commercial Realty, multifamily broker specialist here in the state of Iowa. And kind of Darson's point, we just sit here and usually talk, as I always say in my own videos, podcasts, just trying to add a little transparency, just our thoughts on real estate, business, investing, the markets. Basically, as we said before, we used to always get together and talk and ramble, and we were like, we should get some of the stuff on camera because I think some of the stuff's pretty good.
Yeah. So our intent for today is sometimes we have a topic, sometimes we have specific, maybe cap rate, maybe why would you 1031, why would you buy in this area or that area. With the crazy economic changing right now, we thought we'd just kind of talk and kind of go through how we feel about the business, how we see people reacting to the real estate and economy business, and just our 2 cents. And it'll change next week, I 100% promise. So come back next week and listen. But we both talked to a lot of investors about their feelings of the market and how they see it. And I have not lived through a hard crash. So I've lived through it. I just haven't been in business through it. So I tried to glean off people that have been. I know Jared's younger than me, but has been in the real estate world kind of during that crash a little bit more. So has some knowledge there. But I'll speak on behalf of Jared too. Our investors, we grill them on, how do you react to this? What are you thinking? What can we do? What changes you making to your buying criteria, selling criteria? What's that look like? So with that, Jared, I'll stop and let you kind of just how are your clients talking to you about this stock market crash, real estate slowdown? Yes.
Yeah, I honestly, so I lived through a little bit the last recession. I was just getting in the market in 2008 and 9, so I just got really lucky. I came into the market right as we were already basically bottoming out. And I really started getting active investing until 2010, 11, so right when we started to come back out. So got really lucky there. I can say there seems to be a drastic shift in the last couple weeks. In the last 2 weeks specifically, it seems like we're starting to really hear this a lot more. We're feeling it now. It's been talked about, but we're starting to actually, I think, see it. And I think the reason we're seeing it now, at least from my standpoint in commercial, is that our average deal takes 2 to 3 months to close. So now we're already looking at getting into the winter markets. We're past the spring, the summer, which is usually warm time, rent's going up. People are feeling good about the market, whatever it may be. And I think now that we're getting into that point where we're starting to look at, second half of the year now, and anything that we close, people are starting to really get a little more skittish and cautious in the market. Plus, as we talked about even prior to being on recording here, they're talking about 3/4 point interest rate potentially jump, not even half, 3/4, and doing it 3 times now. So we saw record inflation in May, over 8%, highest in 40 years. The rates are not slowing this inflation down enough, and the Federal Reserve is worried. Headline day in Wall Street Journal was all about, we've gotten past the point of a soft landing, we're getting more into a hard crash. And the Federal Reserve is reacting to past data too, so they're going to be aggressive on what they're doing. We're seeing buyers right now get very skittish, get nervous. I talked to one just yesterday, very, very, very successful gentleman. He's been in the business for longer than I have, 40 years. And he was telling me how there was a development that he actually helped put together as an agent even. He's an actual investor agent. And he was adamant that he was going to buy this deal when it got built. And now that's built, the developer's saying, here's the price I want. And he's going, I told you for the last 6 months I'm going to buy this deal, and I can't buy it at that price now. I'm too worried about it. My cash won't make the money I want to make on it. And he's looking at the opportunity cost. Why buy this deal when I can have cash in the bank ready on hand? So we're hearing a lot. And this was, again, another investor, agency owner, agent as well on that same call we're on as a mastermind I'm part of, said the same thing. He goes, I'm nervous. I'm getting cash heavy. I'm skittish. We're keeping on track of things. So that's just, and these are 2 gentlemen that run massive businesses and, very, very high net worths. So we're hearing it. We're hearing people get worried. We're hearing them gear up. I don't know. I'd be curious to hear, is there anything that you, Darson, do, or any rules of thumb you follow in how much you like to be in either cash flow or cash reserve? Like how much you live off from your cash flow to your cash reserves, just percentage-wise, and how much cash you keep on hand? Any rules you follow, and are there anything you're changing with the recession maybe coming up?
I haven't changed anything. So I've told quite a few people this. Last year, our family bought a large acreage, and I spent more cash out of my reserves than I wanted buying that. It was a property that we've been wanting forever. We've been shopping for 8 years. So I was and am low on cash reserves. So like I have investors say, well, Darson, what are you buying? What are you buying over the last 2 years? And I said, I'm not buying anything. I'm rebuilding my cash reserves. And it wasn't because I saw a downturn in the market. I just felt uncomfortable. My cash reserves are about 6 months of personal expenses, 6 months of business expenses, salary and fixed expenses. And I use fixed expenses. I do not, like, cost of a sale does not go into that department, right, or that savings. So I'm probably at 3 months, 2 or 3 months in each of those. Well, six months in the family, but 2 or 3 months in the business. And to me, we don't need that much money as a family, right? So I don't need to stockpile a ton away for paying my salary or whatnot, which is it's something how I've always lived.
Well, this is why I want to ask this, because I know for me, and again, commercial, we have a little bit longer sales cycles. My cash flows are a little low than where they wanted to be. I want to get them up to where closer to that 12 to 18 month range. Right now, we're sitting around that 6 to 9 month range based on a few different things that may or may not happen. We're sitting about 6 to 9 months of cash reserves and everything, which I feel pretty good about. But again, if deals slow down a little bit, that's getting a little nervous.
Yeah, and again, like you said, your transactions are so much longer. So much longer. I mean, last week I had 3 people call me and say, hey, we want to buy a house. We put offers in 2 of the 3. And there are people I've been talking to and following up on, but they just clicked like that, went. And I didn't, they were in my soon to sell in the next year or 2, but not real quick. And those aren't, those are $200,000, so $6,000 a commission. It's nothing crazy, but yeah, I can pay, I always call them pay the cable bills, right? With those smaller transactions.
Well, the interesting thing I'm thinking about, though, as you're saying, is we're actually talking about something that's actually really important for anybody watching. We should maybe talk about it a little bit, dive into. So we're talking about recession, we're talking about what's happening in the market, we're talking about gearing up. But we just mentioned a couple things that's really important for everybody out there, I feel like, is one, know what your bleed rate is. Know what your expenses are, both business-wise and personally, and know what your fixed costs are, and then also your variable costs are. But knowing and it's called a bleed rate, knowing your bleed rate is very important. So if you're an owner, if you're an investor, if you're just even an individual person, you should always know your expenses every month, know your fixed costs, know your bleed rate, that's what they call it, and then compare that to your cash. This is the thing too, as I'm going over, is that I look at my net worth compared to my cash, and right now I want to be 20 to 30% in cash of my net worth.
Wow.
Yeah, a lot, right? Because I want to be cash heavy in reserves. Now that's also because I have a business as well as part of that. But also, and this goes back around, I'm comparing my cash to my cash flow. My cash flow is only right now probably 30% of what it's, I'd say about half what it takes me to live a year from. So I don't have enough cash flow to cover my personal expenses, so I keep my cash reserves high. So this is, I think, really important for anybody watching, is that you need to be constantly gauging what is your output, what is your input, but specifically what's your output, what's your expenses. Know those costs, personally and business-wise. Track that compared to your cash flow. If you got great cash flow, you may need less cash reserves right now. But again, you need to be tracking these things here. And again, my personal belief is I like to be 20, 30% cash. It's just what I feel comfortable with. Cash might be losing value right now with inflation. I don't care. I'd rather have that to sleep at night. And then the other point is know what your cash flow is. I know you live off very little of your cash flow of what you create. And there's a reason for that. So you can sleep better at night. And I guess, is there anything you're using? I would say going into a recession, whatever you have done in the past in terms of living off from or cash, I would throw at least 25% on top of that. So if you're making $10,000 a month and you're living off $4,000 a month, try to live off $2,500 a month. Cut that down to 25%, or get that up a little bit. If your cash reserves are at $100,000, get that 125. And that's just my thoughts: is get everything up 25% for margin. What do you think?
To me, if you've already thought about this, you don't need to change anything.
Right.
You don't need more cash just because the market crashed. Right. Because you knew at some point, statistic tells you, market is going to go down 20% once every 5 years and 10% every year. There's going to be crashes, right?
Prepare for rain, it's always going to rain.
Right. So now, if you're preparing for a crash right now, that's a problem. Right. You should have planned for that the last 10 years, 5 years, 2 years, whatever. Now, the percentage you're using, I mean, you can throw out random percentages and stuff.
Right.
It's so personalized, right?
It's true.
Because a lot of my clients are W-2 earners and investors.
Okay.
Right? I am a business owner and an investor. You're a business owner and an investor.
Yep.
Right? So that's just different scales. I would say, like, if you have a baseline pension coming in, your other investments can be incredibly aggressive.
Yep.
Right? Because you know that my pension would every month I'm getting $4,000,
Pension
$5,000,
or military,
right?
something like that as well.
Or you use it as cash flow, right?
Right.
Or in your head
Cash
you
flow.
said cash flow.
Yep.
And if that is true, it's true cash flow, meaning all expenses, everything's coming out, and you're really looking at it as like a retirement pension type fund, then your other investments can be incredibly risky. If you own a business, you need to have cash reserves in order to sustain in times like this.
Right.
The odds of it going to zero, very little, right? But it's just, I don't know. Some business owners probably don't. I need to do it.
Right. I think to your point, it's really interesting you said there, though, is that, if you're preparing for it now, you're too late kind of thing. Like it's like you're behind the 8 ball. And it's a joke I made a couple of times, though, too. And I think we made it maybe on this previous podcast as well, is, Gary Keller, our founder, CEO of Keller Williams here, which we're both part of, he's called 7 of the last 2 recessions. Which is a great joke because it's what we do is we typically like to call recessions, but when you're always calling for rain, being Chicken Little, you're always prepared. And so, we've all been waiting for recession. I mean, I tried to call one in 15, tried to call one in 17, tried to call one in 20, which did happen, but it wasn't quite what we thought it was with COVID. Now we're seeing it again. The question all becomes is, we all know what's coming. Is it going to be a thunderstorm, tornado, derecho like we have here in Iowa, or is it going to be just a quick passing storm and that's it?
Yep.
And no one really knows, but at least you're always prepared
Yep.
for when the rain comes. But I think what you said is interesting too is, this is a difference I think between your business and my business. Most of my clients are not W-2 employees. Most of them are full-time business owners because they have to create mass amounts of cash to buy apartment complexes that usually range in the $1, $2, $3, $4 million range. So most of my clients are business owners, not W-2 employees. They've worked themselves out of that realm. There are a few still W-2 employees out there. Most of them are executive level, or they choose to work because they just love their job.
Yep, and that's just it's so personal. Dave Ramsey, I know these guys pros and cons. He always says personal finance is so personal. I told this to someone else, and we talked about it, and they're like, investing is so personal. Real estate is so personal. How much reserves you have, how well do you sleep at night? If you lost everything, how would that impact your life? It would impact my life considerably because I have a family. Right. Before I had a family, I could have lost everything and could care less. I'm going to be, I'll be struck down and, a little depressed, but really, I don't have to support anyone.
But as funny, as you say, everything is so personal, but at the same point, too, the basics are the basics. You still need to know your bleed rate. You still need to know how much expenses you are.
You should run your bleed rate on your personal expenses, right? On every business that you own. To a point, every property. I do not do that, although I should. Yes, absolutely.
Well, and to your point here, and this is where you talk about the session too, and this is where I love him because Robert Kiyosaki talks about this, but let's realize too, we're going into recession. You own investment property. If you're watching this, you own investments. You either own a house, you own apartments, whatever it is. Okay. So if you own a single family house and that property is creating cash for the tenant right now, that's an asset. If that tenant leaves and you cannot fill it for 2 or 3 months, that becomes a liability very, very quickly. So you need to stress test a little bit your investments. Now, I will say, I talked to a client the other day. He said he put a house up for rent and he got 250 inquiries in 24 hours on a little house. So I think we're okay still there for that standpoint. But you need to stress test what that looks like because, again, our assets can become liabilities very, very quickly. Apartment complex, if you're running it at a 3% vacancy right now and all of a sudden you're at 5 or 7, or maybe you still have the same occupancy but collections are off because people don't have jobs. I mean, stress test that. And again, you need to know your expenses. You have to know your fixed cost, your variable cost. For an apartment complex, things you can do for this as an apartment complex owner, obviously you have your taxes, you have your insurance, get budget billing for any kind of utility you can. It creates a systemized, hey, every month you're going to have the same bill. That way you don't have those huge bills in the summer or the winter for either AC or for heat. Figure out your fixed costs and really try to run those efficiently because that's what's going to help you figure these numbers out.
Yeah. We're going to shift into the real estate market and what we're seeing, all that good stuff. I have had a lot of experiences lately of properties that are not selling for what people think they should sell for, which I personally love. My buyer clients usually are attracted to me because I am one that is not emotional and we're going to put an offer on whatever we think is worth, and we're not playing the game of, oh, you listed it at 200, it's clearly worth 200, we'll give you 210. No, we're like, it's been on for 2 weeks, let's do 185. It's how I am, it's how my clients are. So I have started seeing more and more of that. Are you seeing that in your world at all?
100%. Especially, I won't say anything after that too, but there's a couple deals that happened in the last 2 or 3 weeks. 2 weeks typically, I can think of at least 2 or 3 deals where owners have said, I want X. Buyers have come and said, I will offer you Y. And the sellers have said no, and buyers have said no. But I can tell you that seller who wanted X, it would have sold for X 4 months ago, 3 months ago.
Yep.
In fact, a couple of these deals, we had it sold at X even a couple months ago, but something fell apart through due diligence, financing changed, because financing's been going up a lot lately. And all of a sudden now it is not worth X, it's worth Y. And there's been a lot of appraisal gaps starting to take place.
Okay.
Financing gaps take place as well. So for anybody out there, if you're selling, you're not selling, remember, especially for apartments and bigger stuff, you're not selling today's prices, you're selling at prices in 3 months.
Yep.
You need to get ahead of this right now if you're looking to sell. You need to price ahead of this market, because right now if you're trying to price today or 3 months ago, you are behind the 8 ball. And buyers though, and this is what I'm going to caution buyers though too, is that understand though, right now, at least right now, I don't know what's going to happen, the knife's falling a little bit. And trying to catch a falling knife can be really hard.
Yeah.
So yes, you might be buying in a few months, and you're buying at a substantial price drop from what it was 6 months ago. It could also go down further. It may not. This is where you need, as a buyer, really look at your buying profile, your buying criteria. Why are you buying what you're buying?
Yep.
But we're definitely seeing that disconnect right now in the market. I think more heavily in the last few weeks than I have yet in the last couple of years even.
I feel like it's, and this is very anecdotal, so I'm not saying this is statistics by any means, but when the stock market crashes or goes heavy downturn, 10, 15, 20%, everybody pauses. Like, it's a very heavy, buyer's like, no, we'll wait and see what happens, right? And then 2 weeks down the road, everyone's back on the train and you just readjust your numbers, recalculate.
Right.
And that's where we're at right now. We're still, feeling was it 2 Fridays ago or last Friday? It was a pretty heavy downturn in the stock market.
Yep.
And so when you have a considerable amount of money, which most buyers are in the stock market, whether it's your 401k or it's your reserves, which they shouldn't be in the stock market, but whatever, in my opinion, like, people pause. People say, let's just wait. Let's wait.
So
on the buyer
this is
side.
interesting. So a couple of things. A couple months ago, we saw the inverted yield curve happen, and we called that. I think I mentioned it on one of these podcasts. Said, hey, that usually predates a recession within 18 months, and now we're seeing it. We're officially in bear territory as of, I think, this week. We're officially down 20% from whatever the top was, so we're officially in bear territory. But it was funny. I bring this up for a reason. As you mentioned this, I asked a mentor of mine years ago. I said, how do we know a recession's coming? What do we do? And he mentioned the leading indicators index. And Iowa has leading indicators index. There's a national leading indicators index. I reference it very often in my quarter report. If you get that or want to get that, you'll see it. I always am referencing the leading index. It just tracks 7 or 8 things that usually predate. Those numbers will show a recession forthcoming one way or the other.
If you're not on his quarterly report, go get on it. It's free, I think.
Yeah, it is free.
Get on it. Absolutely. It's highly, and I make no money from him getting more clients, but yes, get on that report.
Yeah, it's pretty highly read. It's been done for years now. Anyway, that aside, this guy's back for a reason though. I asked this again, my mentor. I said, how do we know this is coming? He said, leading indicators is one thing he watches. He goes, the other thing, and this was his exact words. He goes, the stock market in general is actually a great thing to watch because the stocks move and the market moves faster than the real estate does. So he goes, just watching what stocks are doing is a great, basically, gauge of consumer sentiment. So when you're seeing stocks,
consumer sentiment, not prices.
Not prices, consumer sentiment.
Perfect.
Yeah, it doesn't mean prices are out of whack.
Right.
I personally don't subscribe to the efficient market theory. If you know what that is, we can go over that later time. But I don't believe efficient market theory. I think it's complete bullshit. And
I'm not familiar with it, so I'll
feel free to tie into that one. Efficient market theory, complete bullshit. It was coming out of Chicago in the 80s. It's bullshit. Anyway. If you believe efficient market theory, you believe...
Okay, carry on.
Yes, go for it.
Anyway, you were going to explain efficient market theory?
At the end of the day, it's really simple. Efficient market theory means there's no such thing as that the market's already 100% price accurate and there's never a deal out there.
Every market?
Every market.
Yeah, that's wrong.
They 100%. Efficient market theory believes that the market is so smart, has so much data out there that at any point there is never a deal because the market is acting in complete logical format. That's efficient market theory in a 30-second nutshell.
Well, I can create a theory too that's not true.
I know, it's bullshit, right? That's what I said, because it's run by people. Anyway.
No one still believes that, do they?
Oh, yeah. 100%.
all markets or just like the stock market? Because I could see the stock market. I would argue.
They believe, not all markets. Now they believe more. Stock market's more the heaviest one. They believe that.
I would agree in the stock market.
A little bit. I just still disagree with stock market anyway. But the stock market is a gauge of consumer sentiment. Back to what we're saying. So if that stock market is dropping, it does show at least how people are feeling. Now the interesting part is it's going to show more how companies are feeling, I think, and more the Wall Street guys than actual consumer. I'd be very curious if you walk up to someone on the street right now and ask them how they feel. They're probably not going to mention the stock market. They're probably going to mention gas prices. My 401k is down. Maybe that. But it does gauge consumer sentiment, and I think right now we're seeing that huge drop, which people, like you said, are hitting pause. They're just going, what's going on? And we're in that uncertainty right now in the last few weeks.
Yep.
It's a long comment, I guess, but
I'd be curious too. I just go into the sounds like taking advantage of the situation.
Mm-hmm.
If you see a property on the market that's been on there for a while, and you're like, yeah, you hit pause, but you're like, yeah, I'd buy that. You might find a seller that agrees the shit is hitting the fan and being like, yep, I'll give it away.
So, no, you know what? Here's where I think there's some value. This goes back to how do we pivot? How do we find deals? Or how do we make money out of this? Here's what I honestly think right now. This does not help me. It all helps you, actually. So back to I do not make money off this. I do not endorse this. This is just Darson, in my opinion. I believe, and I've heard this already, there are some deals to be had in approaching builders and saying, I will buy 5 or 10 of these houses in bulk. Because right now, builders are seeing it slow down. We're seeing builders already come out with saying we need help. They're running giveaways. They're running promotions. We've seen as realtors, they're trying to get realtors in the house.
Yeah, they're bonusing like thousands of dollars if you go do a walkthrough and then you sell one of their houses. It's bonkers.
Builders are getting nervous. And I've already heard again this week, a couple builders are starting to discount their houses. And this client specifically said he didn't think it was a good enough deal for him to buy. But if you're looking to buy and looking to grow, I think there's something to be said about approaching a developer, either you use an agent or approaching yourself and saying, I see you just built 20 houses, I'll buy 10, I want a little bit of a deal. And they're going to hate it because they're going to have to give a little bit of a deal on it and they can sell them all retail. But with how fast things are moving, with rates going up, with costs going up, labor going up, I think they might say, burn the hands worth 2 in the bush, and they need to get their money recouped. So if you're an investor for houses right now, I think there's something to be said.
Yep. And that's a market, and I hate tracking this point in the MLS data, but the new build days on market is at a 4-month level, I believe.
Really?
Now that just means on average, day they break ground and put it on the MLS to the day it closes, on average, it's 4 months. So it's a buyer's market in the new build world.
Right.
Again, I hate that because that could mean it sells one day after it took them 4 months to put up.
I was going to say
I hate the statistic, but it has changed
because you could pre-sale it in theory, and then say it's a sale and then take 4 months to close because it takes you 3 months to build it. So I totally get that. But again, this I think ties into.
It's been tracked that way forever, so it's at least a data point. It has changed as it's gone up to 4 months from under 2 months.
Right, but I think that right now, again, if someone's looking for value right now, I think that is a good value. And again, I just mentioned earlier, a friend of mine said he put a house up for rent, had 250 inquiries in one day. So these houses are slowing down a little bit in the sale prices, where most consumers can't do it, but the rents have not. So I think there's some value right now in single family houses and approaching some of these builders and saying, I will just buy what you've already built. I would not go buy pre-construction now. I would not go to a developer and say, build me 20 houses and I'll buy them coming into November. Different story. I'm talking about stuff that already is sitting there. Yep. I think you could go to them right now and say, I will buy up 10 or 20 of these and I want a deal.
And a deal, like when we say a deal, you're only going to get a 10% discount. And that's at the most.
That's at best. I found 5-10%.
Yeah.
Is probably
okay. I just want to be real clear. And I'm not seeing any single family sell for under $300K.
Right.
So your lower entry single family is going to be $300 to $350.
Right.
In the main metro market.
So doing the math on that here, if your house is selling for $300,000, give or take, you're going to be trying to buy that house probably for something like $285 to $270,
which would be at builder's cost,
right?
Because that's usually all they can mark up.
Exactly. So again, that's where the value's at, I think. And again, depends.
But when that rents for $2,300, $2,400, $2,500, that's not a terrible. It's not great cash flow. Right. It's not terrible. You don't have any major repairs for 20 years.
Right. Well, and again, let's do the math. Let's say you can get it for $285, $270, and you can't get $2,300 a month in rent. You got 30-year money.
Yeah.
You can still get some rates locked in around the 4s, depending on what you're doing and where you're at, depending on who you are. I've saw some rates get locked in the 4s.
I heard commercial rates are better than residential rates right now.
I just closed the loan personally.
Has that ever happened?
3.5% 2 weeks ago. Just closed the loan personally.
Well, are you bragging over here?
I know, it was a great loan. shout out to, no money for this at all, but Green State Credit Union. They gave me some great rates. They are awesome to work with for commercial. They're the largest credit union in the state of Iowa.
I had an offer accepted because we used them. I was like, oh, that was crazy.
Yeah, so just no money from that, but Green State Credit Union is who I used for that. And it was 3.5%. It was awesome. It was just 2 weeks ago. Case in point, we did lock that rate in a few months ago, though, so we got really lucky. I mean, the
I didn't hear that.
The owner,
Okay.
the lender did say, he goes, if you would have done this loan with me today, it would have been closer to like 4.7, 4.8, I think, at that time. But we're still hearing 4s is the point.
We'll wrap this up. Appreciate you guys listening. And if you have any questions, please comment below. My name is Darson Grantham. You can find me. I send a Friday email newsletter out. I send other emails out. I do quarterly events. We're doing an adjustable rate mortgage event next week, actually. And so if you're interested in that, we'll do Zoom, and then we'll also record it and put it on this YouTube channel. Reach out to me if you have any questions, text, email, all that good stuff. And then Jared?
So Jared Huseman, president of the Catalyst team, part of KB Commercial Realty. You can find me on Facebook, LinkedIn, it's my name. Otherwise, Google the Catalyst team. We have a website as well, Catalyst team, K-A-T-A-L-Y-S-T. Because you gave a plug for it, I'm going to give a shameless plug. We are next month, I don't know if you know this or not too, but we're going to have a best story from landlords. Tell your story. It's going to be called Hold My Beer. Hold My Beer Landlord Stories. And submit your stories, your best stories. We're going to open up for voting. Whoever has the best story as a landlord, whether that be the tenant, whatever it may be.
Can I be on the voter panel?
Anybody can vote. Open the public for voting.
Oh, the public's voting.
Going to vote on it.
Oh, so the story comes, public votes.
Yep, and you can speak your own story because you're a landlord too. And the winner of it, whoever has the most votes, will get a appliance set from the Catalyst team.
Jeez.
So up to $3,500.
Viking? Just kidding.
Yeah, up to $3,500. There are rebates in there, but it's going to be called Hold My Beer Landlord Stories. So we're going to run that next month in July. Putting in the details there. So if you want to get on that, let us know. It'd be fun. Let's all share some stories and have some fun.
Yeah, it's one of the things investors love to talk about is their terrible landlording stories.
Yeah, so there can be stories beyond just bad stories. There can be some really fun stories too about maybe you had someone famous in your property one time. Maybe you had someone at an Airbnb come down and party or something. I don't know. There could be some other stories down there too.
Okay.
But yeah, we're hosting that next month. So
We gotta have Airbnb. The Airbnb stories are gonna win that because you can have some pretty wild Airbnb stories.
I don't know. We'll see. We'll fun and we'll figure it out. So that's next month though. Since you gave your plug to yours, I give a plug to
for
mine.
sure. Cool. Okay, we'll see you next time.
All right. See you
Bye.
guys.